What's going on, everybody? This is a training video for when is a good time to invest and what I will be doing when I want to throw a bunch of money for a long period of time. Happy Sunday. My other computer died just over its warranty. So now I had a new MacBook Pro anyways. I just didn't want to have to learn how to use it. So now I am. So this is going to be a short video. Anyways, it kind of just goes hand in hand with my strategy as far as what I do with regular swing trading. It's not much different, but I would just be looking at a longer term time frame. So from the all-time highs, I would be waiting until RSI is oversold on the weekly. On the weekly time frame is consistently a great time to start investing, and I'll just go through the different situations. So the last time it happened, we were the bear market of 2022. As you can see, our RSI got just at oversold, and as you can see, that was a great time to invest, and we just ran up from there. The previous example is the COVID dump. We hit weekly oversold, and what do you know, that ended up being a great time to invest. So it's all these like little mini dumps. So it happened right here. It's even though it still did go lower, it still is a great time to invest relative, because nobody knew that this COVID dump was going to happen. This was an anomaly, the biggest dollar crash that's ever happened in such a short period of time. But like I said, when we get to the weekly oversold, great time to invest for the long term. This was just between the COVID dump and the 2008 crash, it was pretty solid. There was one opportunity right here, which it was a great opportunity to buy up. And as you can see, it went hundreds of percent from this little dump. Obviously, the financial crisis, here was another example. It did get oversold a little bit early, but if you bought there, it wasn't that much more downside, and then it kept on going. And obviously the dot-com bubble crash was another opportunity, although it hit a multiple weekly oversold bottoms. So this is my strategy essentially moving forward, and I will be pounding the table on my social media accounts. I will be saying this is a good time to invest. This is, if you're looking for an opportunity, you have a bunch of money on the side, I will be pounding the table to say now's the time to be throwing into things like the S&P 500. The reason why the S&P 500 is so good, it's the 500 best companies, and they're always changing out. They're always replacing them with the best companies in all the sectors. So it's kind of fail-proof in that sense. It's designed to keep going constantly up. It's a great ETF. It averages 8% a year, and it has dividends. So it's like, invest your own money, just wait for this opportunity, and I will pound the table for everyone to be doing that. Normally you'll pay a place a bunch of money to have them invest it for you, and it's just not worth it. They take a percentage, and I can guarantee you the S&P 500 is gonna beat probably what they do. I can almost guarantee it. They're all why everyone just doesn't do it themselves, I don't get it. But it's because they just don't understand how to invest themselves. This is the best thing you could do. The S&P 500, it's so simple. SPY is the ticker. So anyways, what I'll be looking at doing is the next time we go weekly oversold, I'm going to have cash ready to go in the S&P 500 or other companies that pay dividends of the such. Maybe if another company is standing out at the time, I might pick that. But this is for large amounts of money that I just want to park it somewhere that I'm not day trading with. And I know it will be a great opportunity. a great buying opportunity and will get bought up, or will go up in the medium to even could be short, but in the medium to long term future. That's what I'm trying to tell you, is you're getting it at least a good deal at that point. If you are buying weekly oversold, it is statistically always been a great opportunity to buy for the next bull market. So what would I do? When I'll even have an alert set for the weekly oversold, or even when it gets close to weekly oversold. When it gets close, that will probably be around, let's see. It'll probably be about 15% down, if not 20. 15 to 20% down. When we get close, whenever we get close to that line, I'll have it before it gets oversold. But whenever these bear markets are 20% plus. And whenever the S&P is 20% plus down is a good time to invest. And that's when you can throw, I wouldn't throw all your money in at the very beginning in the event that it goes lower. But if you throw it in at minus 20%, a chunk in, then if it goes another 5% down, throw another chunk in. If it goes another 5% down, so we go here, another 5% down, and then just every 5%. And this is for the S&P 500. These are the best 500 companies. So if the best 500 companies are dying, everything is dying. But I can guarantee you these are the ones that will be the first to recover. Guaranteed. These will be the first to recover. And that's why you want to be in these companies, because they're 500 guaranteed profitable companies. They're respectable, they're established, and they're pretty fail-proof. They're too big to fail, essentially. Although there's extreme anomalies, but there's too many good companies that it wouldn't matter. So when we get at least, I would say 17 to 20% down on the S&P 500, if you buy maybe 25% of what you were planning to invest, and then if we drop another 5%, you can put another 25% and just kind of scale in, and then wait. Basically, it's possible we might start to bounce at that point. And if you wait for if we do end up bouncing, if you wait another quarter, another 3 months type thing, it'll be you'll figure out if it's going to keep going up. Bear markets are generally very short. Look at the grand scheme of things. This was the longest bear market there was, from what I see in the S&P 500. Sorry, the recorded data. The 2001 dot-com bubble, the 2008 financial crisis, that was an extreme one, but it wasn't that long. The extreme portion of it wasn't that long. This was, I can't remember it wasn't even that bad anyways. The COVID dump, the 2022 bear market, and I mean, look at this. We are 90% of the time we are going up, with a few extreme bear moments. 90% of the time we go up, with the exception of extreme bear movements. So always a good time to invest in the S&P 500, but there's times that are better than others that I will be waiting for those opportunities instead of just putting the money in right now. Now I'm just trying to get a bigger nest egg to throw into it. And yeah, so that's kind of my strategy moving forward. So I know a lot of people like to invest, and this is just how I will be doing it in the future with money that I'm not going to be trading with. Just wait for 17 to 20% down on the S&P 500, and then start scaling in a slow fashion. Either if it depends on how fast an extreme it's going down. If it's just going straight down, like an extreme move like COVID, then scaling in every 5% would be a great move, because generally when these wicked moves down happen, they recover fairly fast. So yeah, that's just my strategy on investing. I'm not an investor until the right opportunity comes, and that's when I will pull the trigger. All right, take care, everybody. Happy Super Bowl.